our regular sound check. Please give me your feedback if you can see, if you can hear me. Use the scale of 10 to tell me about the quality of the sound and of my video. Hello, everyone. Welcome, Kazakhstan and all the other countries. Well, today we start another course of the Academy of Private Investor, and this is blockchain course. I will be happy and glad if in the chat box you write down the country you are from. I know that we are international. Welcome to you all into this course, and my regards from Belarus. Next slide. I will introduce myself first. My name is POLUYANCHIK. I am a certified teacher and psychologist and have been for a long time in active sales. Since 2012, I have been an individual entrepreneur, whereas in 2014, I joined the world of investing. I started with bank deposits, 10% as my saving. I studied books, literature, gained some experience, and studied different forms of investing. And in 2012, I started to learn more about blockchain. And you know that back then, Bitcoin actually attracted a lot of attention in 2018 when it became very expensive, and the person who is very interested in investing, actually I got very interested. And since 2017, I am the blockchain enthusiast, and I provide a lot of trainings where I tell people about this technology, share my knowledge. I am a business coach, a practitioner, a motivator, have my own team, quite numerous one, and I am also a master of sports, and quite recently I climbed to 5,642 meters above the sea level, the Elbrus peak. And today we will discuss an amazing technology called blockchain, as well as cryptocurrencies and everything related to them. Next slide, please. As of today, according to the data of May 2021, the capitalization of the crypto market hit its records of almost $2 trillion US, and the people who this or that way related to this industry enumerates over 50 million or even 100 million people. Therefore, I am fully confident that you are to give a deep dive into this topic, into this industry. If you agree, give me your pluses, your likes in the chat, and subscribe to the YouTube channel. And let's get to know this topic closer. Well, this meeting is not the first one. This is the second course in a row. And the first one, the first stage of this course was like a pilot phase. We studied and understand that many people are interested in this topic and they have a lot of questions. And after the first course, there was a test, and based on the performance in which there were some prizes, and Yelena Samokhina, one of the students, became a winner, and quite soon she will get her gift like many other people who got their prizes, their gifts, and within some time, 1 or 2 months, everyone will get their gifts. So please contact the administrators or organizers of this event and you will get your prizes. I believe that you all like winning prizes, and in the end of this webinar, of this course, that will be composed of several sessions, there will be a test for you to sit, and you may assess your knowledge, and afterwards you will get the prizes as well, the gifts. Well, but the program for today's meeting is, first of all, what is blockchain history and advantages of the technology? We will explore popular blockchain. We will explore key concepts of blockchain, types of tokens, ways of token storage, mining and its types, and blockchain security, as well as ways to get advantages on blockchain. How? By using this technology, you can become more financially successful person. I believe everything is interested. I will be glad to see your responses. Give me a plus in the chat box if you wish to earn more through blockchain technologies. We will explore many other aspects, and in particular, I believe that you will get some practical knowledge in our forthcoming sessions and meetings. Well, so this is the program for the meeting, for the course. Next slide, please. Where did it all start from? Well, blockchain technologies and what we have today is the result of the developments in the past. And the storage of information was always one of the things that developed in the world. First of all, people store and keep some historical data, some information about the events taking place, and etc. on different surfaces, including stones, birch, board, and etc. So different elements were used, or materials were used, but one day paper and pencil were invented and people started to keep data information on paper. First of all, some sheets of paper, then some notebooks, exercise books, and there was the evolution of this stuff. And then there was data stored on different digital means, including floppy disks, CD disks, memory sticks. And today there is a wide use of cloud storage of data. You open your mobile phones and all the data stored in social media on different services is available to you. The organization and storage of information was a key for the communities. And if before all these records and books and chronicles were kept in special places, firstly, some religious workers were responsible for this. Then there were libraries collecting and keeping tons of information. Whereas today, you simply click some buttons and you get access to the information, or browse on the internet and get an answer to any question. And access to information today is getting user-friendly, more convenient, and the scope of information you may get access to is getting wider and wider. And there is the exchange of values. This industry, this domain developed as well. Before that, there was natural exchange, whereas afterwards they exchanged into seashells, or some other things were invented to measure the number of goods. Afterwards, they were replaced by paper money, but their maintenance and operation is quite expensive as well. And therefore, today, more and more people turn into bank cards and cashless, cash-free payments. So this digital means of payment. And today, even through your mobile device, you can make payments in a shop. If there are such people who, by using their smartphones, make payments for their shopping in a shop, give me 5 in the chat box, which means that the technologies reached this stage. Well, and all these things seem not to be related, interrelated, but the technologies develop, the world evolves, and naturally it gives birth to some new forms of data storage, new form of data organization, and new form of value transfer. And blockchain is, by the way, a new form of development or evolution of all those things we are used to. Look, a bright example. If you compare your life 10, 15 years ago, you will be surprised to notice that there was no internet and we all used our cable wired phones. We all took notes on paper, whereas today a lot of people could separate their lives into the life before internet and after the internet. Whereas young people, my daughter, for instance, she grew with her smartphone and tablet in hands. Therefore, younger people cannot even imagine their lives without internet. And we are only at the start of the development of blockchain technologies, whereas our grandchildren could not imagine their lives without blockchain, cryptocurrencies, tokens, and all the rest combined. Well, now let's explore in more detail all these things. Well, what is blockchain? Blockchain is, first of all, a technology of data storage and data processing. Information as transactions is entered into blocks that are linked into the chains through the cryptographic encryption. But in an easy language, as I tend to explain this to all my friends and those people I know, assume that you have a notebook where you write down some phone numbers, some details of the transactions, your income, your salaries, or movies you watched, what you like, what you dislike. You may have a shopping list on paper, and assume that one day you lose this notebook. It means you lose all this information, and blockchain as such will prevent you from losing all this. Why? Because every resident of the country, global resident, has this notebook where not only his entries are stored, but the entries of all other users of this notebook. Let's assume that every residents have one common notebook where all the entries are stored. If I lose it, I can go and make a copy of it. And this way, the information is stored in a decentralized way, in a secure way. No one will know whose entry it is. And the understanding of how this technology changes the pattern of data storage and data exchange makes me excited. When I realized this, and I was so encouraged and inspired by this technology that I started to explore it deeper and became an expert in it. Well, let's move on. Next slide, please. Look, one of the key elements is to understand that blockchain is the technology that will change our understanding of data storage and data exchange. To date, many people speak about some personal data. Many people, how to word it correctly, many people would like to have their proprietary space, but look, today all our personal data are shared with our social media as Facebook, WhatsApp, Telegram, and Instagram, and etc. We are online so deeply that you can learn almost everything. If you type the first and last name of your friend, of your neighbor, of your brother-in-law, you will find information on the internet. If he is more or less well-known person or a head of well-known company, at least in the social media, you can find this person. And to date, the world is transforming in terms of the relations people have, financial relations people have. And today, speed is paramount important, speed of data transfer and exchange, and it is more relevant to ensure trust between counterparties, as many people do businesses. They would like to be confident that their customers will pay them, and customers would like to be sure that business will supply specific services, and blockchain technologies address a lot of challenges which emerged and we face in our today's society. Many people are not satisfied with today's banking system, with its complexity, with its being very tough, and they move to blockchain as it provides for speed of transaction and many other benefits. There are people who like being anonymous in blockchain on the internet, so the possibility to ensure data protection. Blockchain also enables us to carry out microtransactions, micro settlements or payments, which before were not feasible at all. And believe me, but quite soon that in most countries, retirement benefits will be paid in crypto. Why? Because many banks started to explore this technology, not from the point of view of taxation, but increasing efficiency of their operations. And once again, I'd like to repeat that blockchain is our future, and you may not pass by. If you still have no crypto wallet, you still don't know what blockchain is and how it operates, sooner or later, you will know about it. But I do encourage you to do it with our webinars that will show and explain and also give you some practical skills of how to use blockchain and make money with it, and many other advantages, and become a winner of some gifts and presents. Well, the history of blockchain started in 2008 when there was the global financial crisis. Hopefully you remember that mortgage crisis in the US, which was followed up by the wave of crises everywhere, devaluation, and the group of enthusiasts under the nickname of Satoshi Nakamoto presented a technology. Well, actually, these developments emerged long ago, before the first blockchain appeared, and it was only one structure combined into one, and the first white paper of this blockchain was published. And accordingly, the first block, or the start of the first blockchain, was started, and it was blockchain. The first block was blockchain. Let's move on. Next slide, please. And the first cryptocurrency, which I mentioned, that was Bitcoin, but today there are a lot of them. There are a lot of Bitcoin blockchains, and this industry develops actively. And since 2008, not a long period passed, only 15 years. But what does it show? It shows that in the first 5 years, cryptocurrency was something unknown. It was the domain of IT experts and enthusiasts, narrow specialists, whereas in the second decade, in the second 5-year period, there were a lot of such people interested like myself who were interested and looking for something new, investing into new technologies and etc.
Currently, there are a lot of blockchain and cryptocurrency projects. A total number exceeds 11,000 different cryptocurrencies, and every day new cryptocurrencies and blockchains appear. Currently, different states introduce regulations and laws on crypto, and also laws are being published on how to use different technologies, where to register, what companies, what kind of requirements you have to meet if you want to launch your blockchain or cryptocurrency. Also, as I said, banks and states start implementing blockchain technologies in their work. There are even examples when elections are held on blockchain. There were attempts of holding elections on a blockchain, but for now, it's not really, did not grow roots for now. Well, currently, blockchain technologies find more and more uses both in business and finance. In 2017, when Bitcoin rose to 40,000 people, 20,000 people saw the financial potential behind it, like exchange of values, and many people predicted it would become the new currency, global currency. But now blockchain is being used by many businesses like Apple, Tesla, and so many other businesses, and they start using it in practice. And I also know cases when I think it was Gazprom that fuels Aeroflot airplanes using blockchain technologies. There is a special application that debits money from the accounts and fuels the tanks according to the amount debited. And it's all implemented using blockchain technologies. Early this summer, I was at a forum in Skolkovo, and I met bankers. And there is a whole sector of blockchain technologies there. And people told the audience how blockchain technologies are implemented in the banking, financial sector. And you will learn more about it, the practical part of it, at our webinars and our course. Let's go forward. The advantages or the benefits of blockchain technologies. First one is decentralization. So the best part that I like about the blockchain is that it doesn't have one single center. All the entries are made into one big network. On the one hand, it might not be to the liking of regulating authorities, states, but on the other hand, it offers quite a lot of advantages, such as security, protection, and many others. The next benefit is the absence of intermediaries or middlemen, so-called. So it's good. On the one hand, there is no banking control and the banks cannot interfere in the transactions. And on the other hand, the blockchain technology and smart contracts can be used to automate the payment processing. And for blockchain, it is very important to ensure high-speed transactions. Currently, the banking system, unfortunately, does not allow to work with big amounts and move around large amounts of money. And this imposes certain limitations, and that's why businesses are on the lookout for new solutions. And blockchain offers such solutions to speed up companies' business processes. Minimum or no commissions for transactions. Currently, there are blockchains that charge no commission whatsoever. You can buy any amount of assets or information in any corner of the world and do it in literally half a second. Unlike banking systems, which do not really allow it. Anonymity. Well, there are a lot of different rumors and opinions about anonymity on the blockchain. Many people say that blockchain is anonymous. I think the other way around is that the blockchain ensures more transparency and openness, because I can check any transaction and see whether everything matches. If everything matches in the ecosystem, maybe someone is printing some extra money. As you know, the American economy printed in the last year 20% of the mass of money that it printed over the last 10 years. Security, another benefit. Of course, blockchain ensures very good security because it's decentralized, and encryption, the way encryption is ensured, does not allow to hack into the entries made in the past. We'll talk about it later. Transaction verification fees or mining. It's a new way of making money for all those who are willing to do so. And any person right now can achieve or get extra income from using and owning blockchain technologies. Imagine that we all use internet, right? That's what we do. And imagine that you get 1 cent for every page that you open. Would it be interesting for you to use the internet more actively if you got money for it? So blockchain technologies allow people to receive extra income from using this technology. So who would like to receive money for using the internet? Give me a 10 in the chat. And meanwhile, we'll move forward. Next slide, please. Yes, I see that there are people who want to receive money for using the internet. And the most popular blockchain is, of course, Bitcoin. And it is popular not because it is the first cryptocurrency, but also because it has certain fundamental principal things that many other blockchains are based on. It's like at a starting point for them. The main characteristic is that the issuance is limited. Only 21 million tokens will be issued over the entire existence of Bitcoin. And it is estimated that Bitcoin issuance will end in 2045. And as you know, there are a lot of industrial capabilities and capacities involved in the mining of Bitcoin. And the farther we go, the more difficult it will be to mine Bitcoin. And Bitcoin is expected to become digital gold once all the issuance will end. And then it will become more and more expensive, like antique things, you know. This is my opinion, and I actively support this technology. And of course, I own Bitcoin. Let's go next to the next page. And the second most popular blockchain is Ethereum. And the advantage of Ethereum over Bitcoin is that it came up with the technology of smart contracts, where mathematics solves certain tasks for humans. And the founder of Ethereum is Vitalik Buterin from Russia. And this technology was launched, the network was launched in 2015. And currently, this blockchain is the second most popular blockchain, as I said, and it's now shifting towards more environmental mining process. And literally yesterday, its price increased by 20%. So those who own Ethereum have now become richer by 20%. Let's go next. The next, one of the most interesting, I guess, and popular blockchains is EOS. Why is it interesting? Because it is different from other blockchains in terms of its logic. Whereas Ethereum and Bitcoin is like a chain of data going one after another, EOS is a big decentralized computer, and the use of those resources, like a pool of resources, and using those resources allows to scale up the blockchain. It's one of the most scalable blockchains ever. And this technology also allows to make lots of entries in it without paying any commissions, any transactions fee, which is very profitable and attractive for many businesses. And during our next sessions, you will learn about some blockchains that are based on this technology. Let's go to the next slide. So what is a fork? A fork, well, programmers usually refer to a fork as a project created by copying software code from another project. So take a software, make a copy of it, add some more functionalities to it, and you got yourself a fork. So kind of our children are our forks, you know, if we put it into biological terms. So the first technology to be forked was Bitcoin. And then all other Bitcoins took, in this way or another, something from Bitcoin, some logics, functions, principles, and added some functions of their own. And currently creating a new blockchain based on the existing code is called forking, to create a fork. It's like in the Christian religion, they say that people's ancestors are Eve and Adam, and in this case, Bitcoin is the Eve and Adam of all the other blockchains. So here you have the most, let's go to the next slide. Here you have the most famous cryptocurrency forks, like Litecoin, it's the fork of Bitcoin, Bitcoin Cash, Ethereum Classic, Dogecoin. So, and after Litecoin, there is a Dogecoin. And there are quite a lot of different forks. And during our next lecture, we will look into one of the most interesting forks, which is a fork of EOS. And currently it is the biggest fork of EOS, which has more than 900,000 wallets on it already. This is going to be an interesting session delivered by another speaker, but I will be there as well and will be waiting for you there too. Let's go to the next slide. Okay, currently on the website blockchain.com, you can trace how many wallets are currently in the ecosystem. And we're talking about one blockchain only, Bitcoin blockchain. So the number is more than 75 million wallets. And there are a lot of other blockchains, which testifies to the fact that the popularity of this technology is growing. And look at the pace of the growth. It grows quickly and confidently. And the number of people with cryptocurrency wallets is growing as well. So whereas a few years ago, your friends and acquaintances might not have had their wallets, right now, I'm sure that there are people who know a friend or someone who has a cryptocurrency wallet. If you don't yet have cryptocurrency, please tell us so in the chat if you don't have cryptocurrency or a cryptocurrency wallet. So don't be shy and give a sign in the chat. And I hope that our webinar will help you figure it all out and eventually will, make you create your own cryptocurrency wallet and finally join this wonderful technology. So give me a 1 or a plus in the chat if you don't own a cryptocurrency wallet and you came in here to learn what this technology is all about and why you should be using it. Let's go to the next slide. Okay, currently, to date, lots of people across the entire world are related to crypto industry and blockchain technologies in this way or another. So take a look at this slide. If we take all the people involved in crypto, traders, exchange players, developers, crypto enthusiasts, investors. So as of today, most of these people live in North America, which means that the United States and Canada are the drivers for the growth of the world economy. Those are countries with most developed economy, and people in those countries have blockchain wallets, cryptocurrency wallets, and other continents will follow suit too. Then Europe goes next, and then we can see that there are quite some people who live in South America and Africa and are related to crypto or blockchain technologies. Let's go to the next slide. The capitalization of the crypto market. So what can we see here? So from this chart, we can see how actively and how quickly cryptocurrency industry is developing. On the website CoinMarketCap, which I recommend you visit, collects the statistics about different cryptocurrencies, blockchains, exchanges. And it is on this website that lots of people find information about tokens. And many people go there to look for information about different coins and exchanges. And I would like to point out here that this website is like Wikipedia. Do we have people who know what Wikipedia is? Give me a plus in the chat. And CoinMarketCap is like a cryptocurrency Wikipedia. It doesn't mean that CoinMarketCap has all the information about everything out in the market, but it has the biggest database about crypto. And if there is no token there, no information about a particular token or about a particular exchange, it doesn't mean that it's bad, that it's a bad company or a bad token. It just means that this particular website does not host information about that particular token, or maybe it doesn't have enough information. Maybe the information about that coin hasn't yet reached the website, because all those services are not free. As in any social media, if you want to advertise yourself in social media, you can pay money and you will be advertised. But if we talk about the top cryptocurrency, Bitcoin, Ethereum, EOS, Tether, and so on, then of course, CoinMarketCap will have very extensive, reliable information about them, because it is checked after all. If we're talking about new tokens, young coins, they appear on the CoinMarketCap eventually, but the information about the presence or absence of that coin on CoinMarketCap is not a real indicator of anything, but it is there that I recommend you assess and analyze the development of the entire market. It is there that you will be able to see how the industry develops and what happens to it in general. And in this particular case, on this chart, we can see that the world's community interest to blockchain technologies is growing very constantly and with a very fast pace. Let's go to the next slide. And here we have a very interesting chart or a diagram, which represents the speed with which the internet has developed in the world from 2004 to 2018. The number of internet users has increased to very big proportions. So currently, the biggest part of the global population uses internet, and blockchain can expect the same. Whereas currently we have maybe 120 million users, and people who use in this way or another are related to blockchain technologies, then in the next few years, it will happen. The introduction of those technologies will happen, and it will happen very fast, because the internet itself facilitates further or faster introduction and implementation of blockchain technologies. Whereas it took 24 years for the internet to develop, because you had to prepare the infrastructure, the computers, the satellites, and cell towers. In the blockchain will develop faster because it already develops in the internet, and the internet is present in almost every house. So the next slide, please. The key concepts and notions of blockchain. So here it is very important to cross the I's and dot the I's and cross the T's. And if you're watching this webinar, take a piece of paper and a pen or a pencil and write things down, so that in future, at future elections, you have a clear understanding of what blockchain is, and you would speak, let's say, the same technical language as we do. So what blockchain is? Blockchain is a technology for storing and processing information. It's not the same as Bitcoin. Bitcoin is like a derivative of the blockchain. A block is like a list of entries or records, just a small part of the blockchain, which stores some kind of data. It's embedded in the chain, hence the name blockchain, and you cannot really change it. It is there forever, set in stone. A token is a kind of a unit. It's a record in the block. So imagine that a blockchain is like a library, a block is like a rack with books, and a token is a book in that on that rack. And a token can be an entry about anything. It is not necessarily a like financial unit. It can be an entry about the amount, a number of goods, its quality. It can be an entry about the size, form, and so on. This entry can give us any kind of information. And if we're talking about token, it doesn't mean that it's all about money or payments and settlements. Whereas when we talk about cryptocurrency, that's where we mean tokens that serve the purpose of a payment unit. So cryptocurrency is a token in the block of the blockchain, which carries out the function of payment or settlement of accounts between users. I hope that's clear. And if it's not, tell us so in the chat. Do you have any questions to the first part of our lecture? Is everything clear what blockchain, block, token, and cryptocurrency are? Do you see now the difference between those terms, that one derives from the other? If we're talking about cryptocurrency, it doesn't mean that we necessarily talk about blockchain. Or if we say blockchain, it does not necessarily mean that we are saying cryptocurrency. So if there are no questions, then we can continue. And the next part of our webinar will be about types of tokens. To date, there are very many types of tokens, and we're going to talk about the most common of them, which are cryptocurrencies and security tokens. There are more than 8 types of different tokens, but more details. We will look more into detail into those 2 tokens, and then we'll give you more information about others during our next webinars. So what is the difference between cryptocurrencies and digital shares? Cryptocurrencies have the function of a settlement payment unit, And as any unit of measurement, they are valuable and can be used only by people who put value in them. For example, if I go to a person who knows nothing about cryptocurrency and offer them to exchange Bitcoin for dollars, like I tell them, give me $10 and you give me, I'll give you a Bitcoin and you give me $10, he might not agree because he now knows nothing about Bitcoin. He doesn't know what kind of technology it is. But when they learn about it, when they start using it, of course, they will be eager to exchange $10 for a Bitcoin and even more. And this particular cryptocurrency does not necessarily have to be registered anywhere. It's just a unit of payment and is appreciated by the community that it uses it. Whereas security tokens are digital shares that are regulated and have some kind of a financial legal substantiation, justification. A security token, a digital share, is regulated by financial organizations, the national central banks, ministries, and so on, and has some intrinsic value. And this token allows people some kind of a protection, safeguard against losing money. There is law on regulating the transfer of tokens, storage of tokens. And those tokens are subject to different legal acts. Well, even cryptocurrency is subject to law. It can be subject to tax and so on. Whereas digital shares, they are regulated by specific authorities. Digital shares, aka security tokens, are issued by a specific organization. When we talk about cryptocurrencies, the launch of the blockchain and the launch of the cryptocurrency takes like 15-20 minutes. Whereas to launch a digital share is quite more difficult. Well, to create a token is not that difficult, but to register it, to confirm the underlying assets, and to assign it the function of a share is quite difficult. Let's move forward and let's talk. We will talk more in detail about those tokens at our next webinars. Let's go to the next slide, please. And let's see what kind of other tokens we have. We have utility tokens. They have some kind of a utility use to them as tokens in a metro, in subway, or I don't know, like lottery tokens. They can be used to measure a square foot of residential area or storage of data or any other function. It allows people also to exchange one tokens into other tokens. They are kind of utility service tokens, and usually their function is described in the white paper. Platform tokens. Platform tokens are basic tokens for a specific blockchain. For example, the Ethereum token is the main token of the blockchain Ethereum, and on the Ethereum blockchain, there are many other tokens, but for them to function, they need Ethereum token. The same stands for EOS and UNTB. Those are tokens without which other tokens or coins won't be functioning. It's like gas for a car.
Let's move on. Stable coins, they are tokens linked to stable currencies, and mostly USDT, USDC, USDU, different variants of dollars on different blockchains. There are different blockchains, and accordingly, each of one has some measurement unit linked to the US dollars. Why? It is easy and convenient for the settlements, and on blockchain, on many blockchains, you have it, and you may exchange them into $1 plus a commission to be charged. Crypto fiat, this is a prototype of crypto fiat money, which are currently actively developed by different banks of different countries. And quite soon, these tokens will be of high popularity from the point of view of the introduction and implementation by the countries, governments. There will be crypto fiat funding used, those tokens that could be exchanged in a legal way into the fiat money or fiat currency of any country. Next slide, please. Tokens of natural tokens or natural assets tokens, natural resources tokens. They could be linked to some natural resources such as oil, gold. They do not reflect the price, but the number, the quantity. And the price depends on other parameters. And there are NFT tokens, crypto collectibles. So you may tokenize everything. And today, even pictures or different posters could be tokenized. Everything which could be done as an entry somewhere could be tokenized. And even we, to date, we may not even imagine what in our daily life could be tokenized. But the brightest example I always give is the square meters in your housing. There are some cases when relatives or investors would like to divide some property, and sometimes it is quite challenging. And through tokenization, you may distribute among many people even 1 square centimeters in a shopping mall. So this is the benefit of tokenization. And without cryptocurrency, it is impossible. There are a lot of documents and people involved, whereas tokenization of different assets allow a lot of people to get access to different assets, various assets. Next slide, please. The next part of our today's session will be about methods of storing of cryptocurrencies. This is very important as many people start understanding how they can make money with cryptocurrencies, but they don't know where to buy, how to store. They see the price at the exchange in the news, they see that it is growing, they want to make money, but they come in and don't know which buttons to click. And unfortunately, many people lose access to their assets as they do not memorize the passwords. And one of the safest methods of storing tokens is on blockchain. And it could be done through the web page of this blockchain, explorer of the blockchain, or by downloading blockchain onto the smartphone or your PC, your desktop computer, and storing all the information on your computer. But today, most people apply online access to blockchain where all the entries are stored, but further details will be provided in the forthcoming sessions. Based on the example of our blockchain, you will study all the steps of wallet creation, of carrying out transactions, what is important to remember, and which resources to use for different operations. Next slide, please. Well, another secure method of storing your tokens is cold storage. There are two methods. When you download onto the disk, hard disk, but this is quite bulky and hard work, as you need the special software, or you may download and hide somewhere a part of blockchain in case of any global disaster, and the internet is idle, is not operational, you may turn on 2-3 computers and restore the network because the entries are kept on your device. And another method of cold storing is to store keys to blockchain. You store not blockchain as such, but the keys of access to it, physical keys, and they are kept on the physical device. These methods of storage at some physical devices are called cold storage because physically internet is not required, and fraudsters, criminals could not hack your login or password if your device is disconnected from the internet. And this is the reason why it is called cold, frozen. So you may not get access to it until you unfreeze this thing, meaning until you connect to the internet network. The next method of storage is the next one, the third one, this one, is on different platforms. It could be the cryptocurrency exchanges or payment services such as Global Unit Pay, for instance, where you may store not only fiat, dollars, US, and etc., but other crypto, Ethereum, Bitcoin, or you can open an account at other platforms and deposit some crypto. But you must understand that when you keep your crypto at the exchange, you have no physical access to your wallet. In the second method, you decide who to send, how many to send, you click the button, you enter your wallet. Whereas in the second case, you simply instruct this or that institution to carry out a transaction on your behalf. If you are at the exchange and you would like to transfer something to someone, you give a message of withdrawal to the following account or wallet, and the exchange follows your instructions. And there are two sides of the coin. The first one is reliability and safety, as crypto exchange is a large organization that takes care of the safety of its customers and clients, and it is hacking protected. Whereas, on the other hand, there is the control function. For instance, the exchange may ban the withdrawal or request confirmation of the transaction or request additional data to be provided, but not with the purpose of stealing your money, but to be compliant with the regulations, as it is regulated by some guidelines, and it is compliant, it must be compliant with money laundering regulations and many others. Therefore, on the one hand, we have reliability, whereas on the other hand, we lose confidentiality, because at different websites and exchanges, there is the profile verification, and you must confirm that this cryptocurrency is bought in a legal way, and you received it in a legal way as well, and you do not transfer it for illegal purposes, where you use it for personal purposes or for business, corporate purposes. I recommend you to have three methods, to apply three methods, but you must understand when to have this or that access. For newcomers, it's enough to have an account at the exchange to try to test some things, because your account at the exchange or any service, you may go to the help desk and restart your login password, and they will help you if you do something wrong. You can correct your mistake. Whereas in case of physical access online and you do your transfers on your own, blockchain will not fix your mistakes. If your money is transferred to a different blockchain or account, it is quite unlikely to get it back. Next slide, please. Well, here, let's talk about mining. What is mining? Mining is a way to mine new tokens. This is the reward for you, your being loyal to the network, to the chain, and this way you validate the transaction. Look, mining historically, or if to translate it, etymology of this word, this is to mine some resources, for instance, oil, crude oil, and there are miners and they work and they get rewarded. And a similar case to this term mining. Mining is not done for nothing. You simply plug into the socket and the money is pouring. No, for you to be able to get additional benefits from blockchain, you are to provide some services to blockchain. In particular, you are to maintain its operation or to be a holder of this or that token. Or you are to, through the equipment you have, must secure the storage of entries of data, entries of blocks, and maintain the speed of operation of blockchain through your devices. Next slide. There are two types of mining. So originally, the first one, blockchain is created, is proof of work. Blockchain was created, proof of work, when you are rewarded in exchange of your device, computation device being functional. It uses the computation capacity to calculate some encoding in cryptography, whereas the second method is more progressive. It emerged a bit later, and to date it is very popular that the second blockchain in scope, Ethereum, moves from proof of work to proof of stake. This is a lengthy process, multiple step process, but why Ethereum moves to this method of mining, as it is more environmentally friendly, as it does not consume so much energy, whereas proof of work consumes a lot of energy, whereas proof of stake is the mathematical formulae and algorithm and terms and conditions to be met for you to get extra rewards. Proof of stake for it, the focus is on access of the specific machine to the internet, whereas for proof of work, the computation capacity of this device is of paramount importance. Let's move on. Mining under the type of proof of stake has different variants, but the key idea is that you take some tokens, entries, different tokens could be, I will stress it, including digital shares, cryptocurrencies, utility tokens, different things, and you freeze these tokens in some software, or you close them with some smart contracts. Assume that you have a lock on a ban, and for you to actually store the specific number of quantity of assets or activating some software, a smart contract, the network rewards you. It understands that you are a loyal user of the system and you are rewarded. And nodes, there is such a concept node. This is a node that allows you to generate more blocks. Node is a physical computer quite often that is 24/7, is in network and validates and enters different transactions, and it has some software, but it is not very powerful. This is a normal server where 24/7 some software is operational. Let's move on. Next slide, please. Well, Decentralization. What makes blockchain safe and secure? Decentralization. Look, you have your money in a bank and something happens, and either a bank or an exchange or the head of this exchange or a bank are not in work and they don't open with their key access to your bank cell. And the problem of decentralized system is that non-participants, only the center knows whether the system is correct or not, whether everything is distributed properly. Decentralization is a key that enables and makes blockchain popular. The more people joins blockchain industry and different blockchains, Bitcoin-based blockchain and other blockchains, the more extensive this network of decentralized nodes is. And imagine that we are all our own bank and ATM, and you don't know how much money you have in your account, but how much money the bank has. You know the number of users, and you know how often and how many transactions are carried out, and you can plan and forecast your behavior. Whereas when you are in a decentralized system, you're like in a vacuum, whereas in centralized system, you have this understanding. And from the point of view of protection, if you attack the center, then the whole system will be ruined. But in a decentralized system, if 3-4 units are attacked or ruined, the system will continue its operation. It's similar to having McDonald's restaurant in everywhere around the world. If one McDonald's restaurant closes in one country, it does not mean that this chain will stop operating. Well, what are the other advantages of blockchain and why it will continue? The next feature is anonymity. Look, I have double treatment. On the one hand, double perception. On the one hand, blockchain is anonymous network, and it shows the transactions of all the users, but we don't know who these users are. But under the legislation, these users should be identified somehow. Blockchain itself does not show who is who. You may write it down. If you want to reveal your profile, if it is possible, you may write down that this wallet belongs to me and gives your detail. Publish this wallet in your social media and everyone will be able to see that you are a well-off person, for instance. And today, all the financial institutions that this or that way have relations with blockchain, including exchanges, banks, and other services, and the governments and the global financial system intends to make users verified. Why? To secure the financial system for some fraudulent crimes and blackmails and money laundering and terrorism financing, so that to prevent all this, user identification must be ensured. Next step, next slide.
So what makes blockchain secure? Well, it's cryptography and encryption, digital signature. All the entries are put one after another, and those entries cannot be really forged if you do not do it in a sequence. For example, imagine a situation that you buy a product and the chain of blocks has an entry starting from on which plant, from what component it was created, on what plant the pieces were put together, assembled together, who created the product, who delivered the product to which warehouse, in which store you bought it. And in order to change something in the description of the goods, for example, the contents, let's say you buy some food product, I don't know, juice or something else, some food product. And on the label, it says that the product was produced there and there. It consists of this and that component, and you see the ingredients. And if this entry is made on blockchain, then you won't be able to change the contents. The code of the blockchain will show from what components the product is made, and nobody at any stage will be able to change it, because to change it, you will have to change the entire chain of blocks, which is go to the origin of it, take it to the store, from the store to the delivery service, from the delivery service to the assembly line, and so on. So you won't be able to forge any data and lie to the consumer, because this particular product, its entire history is written on the blockchain, the history of its creation. Let's move on. Smart contracts. Next slide, please. Smart contracts is another benefit or advantage of a blockchain. It is very much in demand function of the blockchain. It is much in demand by businesses, because businesses always have a risk that they won't receive their payment, or some products won't be delivered to them. That's why we have so many lawyers, contracts, paperwork. We are, signing papers all the time, double check everything, especially when there are two businesses going through some really difficult deals. It has lots of legal nuances. So a smart contract is simple math. If you supply the goods, you receive money. You don't supply the goods, you don't receive money. And it happens automatically. Imagine that you are fueling the tank of a car, and as soon as you push the trigger on this fuel gun, and the fuel is being pumped into your tank, the money is debited from your account. As soon as you release the trigger, the money isn't paid anymore. So it won't happen that you fuel up your tank without paying for it, or they won't be able to charge you money if the gas station is empty. Okay. So if we're talking about and it applies to other relationships as well. Our future elections, you will learn more about digital guarantees, a very interesting instrument based on smart contracts. It's an opportunity to take loans and use borrowed funds and use tokenized assets as collateral, like tokenized shares, digital shares, and so on. It's a very interesting technology that can change the very essence of doing business. And currently, I'm building a house, and it is very important for me that the money that I handed over is correctly used, so that I realized what kind of goods had been purchased with that money, where, and the smart contracts allows me to do that. Well, of course, I'm not, I don't have a smart contract for my house construction right now, but I realized that it will change the entire understanding of contractual relations in our life. I think many of you faced a situation when you did some work and the employer didn't pay you for that. Give me a 5 in the chat if you ever been in that situation. You did some job, or maybe your friends or acquaintances did it, and they didn't receive their payments or received less than what they promised. So give me a 5 in the chat if it ever happened to you. Okay. There are lots of people who faced this situation. I'm sure. And the smart contract is the simplest solution to that problem. You enter it into a smart contract. You are sure that the employer has money to pay you, and the employer is sure that if you deliver your end of the deal, the money will be automatically transferred to you as soon as you deliver your work and perform a certain amount of work or scope of work, and nobody will be able to affect that. And you as the employee will be, as a contractor, know that your income will not depend on the will and whim of the employer, but the smart contract will make sure you receive your payments. It's like 2 + 2 makes 4. Let's move on. Next slide, please. Ways of raising capital to bring the project to the market. Very interesting function of the blockchain itself, because we all know that all the transactions are on blockchain are mainly financial operations transactions, and blockchain allows many more opportunities here, which is access to a wider community of people. And blockchain itself is like a safeguard for investors and entrepreneurs to be able to conduct their financial activity in a quality way in terms of raising capital to their business. We all know the standard way of a company going public, which is IPO. When the company needs more money and the private investors' money is not enough, they place their shares in the open market, and that's how they raise capital. And there are a lot of legal nuances and details in here, lots of paperwork, like red tape and so on. And it's very difficult to implement that procedure. Blockchain is a good solution to that, thanks to its structure, thanks to the chain of blocks where all the entries are stored, and it will never lose the information, how many shares were handed to whom, when, at what price. Everything is securely recorded. In 2017, there was a boom for ICOs, which is initial coin offerings, where new coins were issued and companies raised money for that. Let's go to the next slide, please, and go in detail into each of them. IPO is a means of raising capital in which a private company seeking financing offers shares in its organization to retail investors. And it's, again, a lot of paperwork. And the next way of raising money, next slide, please, is ICO. And the boom of the ICO fell on the 2017-2018. Next slide, please. And it did offer quite a lot of benefits, but there are lots of companies that raised money and then asked themselves, like, why would we do any further business? We already raised a lot of money. And they simply disappeared, and then people didn't know what to do with their tokens. So lots of projects were either failures or were obvious pyramids or scams. But the whole process showed its efficiency in terms of the speed with which money was raised and the way new investors were attracted. And then in 2017-2018, many regulators and governments saw the potential behind it. And next slide, please. The new form of raising capital came up, which is the security token offering, STO, which is a combination of IPO and ICO, where there is regulation. There are different organizations that regulate what the companies can do, what they can do, what they should issue to their investors, where the law establishes the obligation to pay for the company, the company's obligation to pay, and ensures the protection of the investor's assets. It is necessary to understand that according to regulations of different regulators like SEC of the United States and other regulators, there are so-called lockup periods or the freezing periods, because businesses need time to implement their objectives. And again, in order for investors not to be able to prematurely affect the growth of the company because of the speculations, somehow manipulate the company, there are those rules. And according to one of such rules, as per the requirements of SEC, you cannot sell shares to retail investors for 1 year. So when a company issues digital shares for 1 year, you cannot issue those shares into the open market. Only the company can have it, or the company can hand them out to their potential investors. But they cannot sell those shares within in the open market within the first year. This is one of the rules of the Securities and Exchange Commission of the United States. On the IPO market, they have other rules. In some cases, it's up to 3 months that you cannot sell shares and so on. The form itself combines the best of the two worlds. First of all, it's regulation. It's the protection both for the investors and businesses. And on the other hand, it's blockchain technology and all of its advantages, which simplifies the procedure and allows you to raise more money and in a quicker time. The next part of our session, very important part of our session. Next slide, please. Yeah, by the way, we already discussed the main cons and pros of pros and cons of different fundraising tools: IPO, ICO, and STO. IPO is shares, ICO is utility tokens, and STO it's digital tokenized shares. And it has a double benefit, which is centralization, decentralization, as you can see, centralization of data. Only a company can issue these tokens, specific company. This blockchain or STO security token is regulated. Well, the blockchain can be non-regulated, but the tokens will be regulated, which is very important. That on one blockchain, there can be different tokens, including digital shares. And we need to understand what's what, because some people might mix up those things. Let's move on. Next slide. Well, look, the next section is dedicated to ways of generating income. We will look into the main income generating strategies, and there are way more of them, and you will be able to learn more during our further webinars. But today we're going to talk about the main ways of getting income, and the first most popular way is just purchasing digital assets at the pre-sale stage, ICO or STO. In 2017, this income generating strategy made lots of people rich, but also lots of people lost their money. That's why this particular income generating strategy should be used smartly. You shouldn't be investing into assets you know nothing about. Here you need knowledge, and the more the technology develops, the more the internet develops and different services, the more knowledge you need in order to find and properly evaluate a project, see if it's a quality project. That's why I need to take education in the Academy of Private Investors, and we will share all the knowledge and experience we have for you to make correct financial decisions. ICO and STO It's a pre-sale stage. I think it is one of the most highly yielding ways of making money, but also risks are quite high. The next strategy, let's go to the next slide, is mining and staking. Well, there are two types of mining. We already discussed them, which is proof of work, which is mining using the equipment. And there is also proof of stake, and it's called staking, where you just hold some tokens, some cryptocurrency, and receive additional income for that. How does it work? Using your money, you can buy some equipment, you plug it into the socket, and it starts generating income. Or you use your money to buy some resources on the exchange, some kind of tokens, units of payment measurement. You click on stake them or freeze them or send them somewhere or lock them down, and for that, you start receiving remuneration for not using that token, for holding it. And then you can cash it back, the reward, through the exchange, for example. The advantage of proof of stake mining, which is staking, is that you don't need to buy or sell equipment, because after you buy the equipment, you have to dispose of it. You have to maintain it. You have to make sure that you have electricity, you have cooling system in place, to make sure that anti-fire measures are taken, and so on and so forth. And mainly, in this way, cryptocurrency is produced by industrial enterprises, whole parks, mining farms. And for common users, mining is not the best way of mining. Whereas proof of stake, which is staking, is accessible and available to any person. You just buy the tokens. After learning about them, you hold them, you log them with some software, you activate a smart contract by clicking a button, and then you start receiving new tokens that you can sell on the exchange. During our next webinars, you will learn more about some of those types of minings that are available to you already today, and you will be able to participate in the process, and you can take a test and also receive some of the tokens that you can also mine on your own. Let's go to the next slide. The strategy for income generating in the form of holding a coin. Very simple. You just buy a coin and wait without doing anything. You could buy a Bitcoin a couple of years ago when it costed 5, 10, 20,000, and just wait for it to grow to 25, 30, 40, $60,000. The sooner you buy and the longer you wait, the more income you get. It's important to understand that not everything that you bought in the long run will grow. Here you need to have some fundamental knowledge, what kind of assets you better buy for a long-term period. And those strategies can be learned in the Academy of Private Investors. It provides the relevant knowledge, and we, the Academy, have professional investor and investment consultant courses where you can get lots of information about how to analyze different companies, cryptocurrencies, and stock in order to hold them long term in your investment portfolio. Let's go to the next slide. Income generating strategy number 4, earnings without or with minimum investment. There are such possibilities online, but also there might be some low quality projects hiding behind this strategy. They offer money out of thin air, but those projects are possible, like cranes, airdrops, bounties, and so on. And one of such strategies is the test that you can take after taking this course. There will be 4 or 5 sessions. You will learn about blockchain wallets. You will look into specific blockchains. You will learn how to create wallets. We will show you how to mine And if at the end of this course you take a test about the information that you received, you can participate in the lottery of the token, UNTB token on Cryptounit blockchain. More information about the value of the tokens and what kind of tokens they are, what kind of promises it offers, you will learn at our next webinars. Let's go to the next slide. Cryptocurrency exchange or arbitrage and trading. So those are speculative strategies of income generation. People on the exchange buy and sell cryptocurrency. It looks more like working, real work, when a person comes to a place and then starts calculating how much they should invest when buying stock, when to exit, to sell, and tries to earn on the difference of the exchange rates. You buy low today, you buy high tomorrow, and since the market is volatile, it allows you to make good money.
Arbitrage is when in different platforms, cryptocurrency exchange, people buy crypto wholesale, and whereas in retail at different exchanges, crypto exchanges, or otherwise they resell it and earn more money. There are also different methods of speculation on different coins. You can dump coins. There are different speculation strategies, but I don't recommend these types of earning for newcomers, as the risk is very high of losing your money. And this method fits those people who are experts, who specialize in this. Next slide, please. Well, I believe, like most, the investing in digital stock, digital shares. Why? As this is a longer term secure method of investing. And I encourage you to consider this as the basis, as the foundation of your crypto earnings or crypto investment. This is well regulated, it is legal, and you can always cash out these proceeds as they are always secured or backed by some assets, and you can always exchange them into the money. And these tokens are backed by the companies you may contact to get the feedback. And digital shares, not all, but most of them, generate some dividends. And when you invest with the purpose of getting dividends, I believe is the most long-term interesting method of generating money, of getting income. I follow the steps of Warren Buffett, and I do my best to create the large capital, and I study in detail his strategies, his ideas, his statements, and I believe that Warren Buffett proved to the entire world that the result of his actions made him a very wealthy person. And I would like to be not as wealthy as he is, but quite close to his capital. And maybe one day, who knows, we will sit at one table and dine. Next slide, please. Modern ways of blockchain use and cryptocurrencies. Well, as of today, there are countries that already started to accept cryptocurrencies for their internal settlements. And one of them is Petro in Venezuela, where they digitalized the oil, and they do their best to carry out settlements in their national cryptocurrency. El Salvador recently announced that it will accept Bitcoin as the payment means. Many payment systems and banking services started to use cryptocurrencies, and not only, they also use blockchain. So they started using blockchain, and not only the blockchain for their databases and data storage, but they started to integrate their systems into their systems. The possibility of crypto storage and exchange, and PayPal quite recently started to use in their wallets cryptocurrencies. UGPay group, by the way, gives you a possibility. Global Unit Pay wallet, I use it. This is a Swiss wallet which allows you to exchange crypto into fiat and use the card and pay for your purchases online, and you can actually buy everything you like with crypto. So today there are a lot of services, countries, and businesses more widely applying cryptocurrencies and blockchain technologies in their operations, while many banks are at the stage of the creation of their national cryptocurrencies. This is another important factor to consider, and I believe that time will come when paper money will simply die on its own, like seashells or some silver and golden coins before. You will agree that some centuries ago, they were widely used silver and golden coins. They were very valuable. Silver and gold are still valued, but we don't use them in our daily life for a long time, neither the silver coins nor gold coins. So they are of historical value rather than practical value. Whereas 200 years ago, if you write a figure of 100 and color it in yellow, so no one would actually give you a glass of water in exchange of this paper. Whereas today the situation changed radically, and today instead of paper money, for instance, we use Visa or MasterCard or paper banknotes. And my vision is the following, that in the near future, it will happen quite soon, believe you me, but look, it may happen that on one day, all the banks will come to an agreement and will say that starting from tomorrow, we will not accept paper banknotes, and all the settlements will be done online. And naturally, blockchain will be conducive to this. Well, and to sum up, next slide, please. The theory is great, whereas practice is even better. Today, I give you a lot of theory. We studied theory, the terms, the methods of mining, the methods of income generation, and I shared a lot of content. Hopefully you like it. Using the scale from 1 to 10, if you learned something new today, some new realizations, or you learned some new terms, new vocabulary, some new knowledge, whether there are people for whom I was of value. Well, I see your feedback, your 9, your 10s. Thank you very much for your time, for attending this webinar, and for taking this information with you. Well, and quite soon, in the near future, and to be exact, on the 7th of September, 4 p.m. Moscow time, there will be another session in our series of webinars on this topic about the advantages of the Cryptounit blockchain and its tokens. And then, by using the example of one blockchain, you will discuss a lot about the types of tokens, wallets, staking programs, and a lot of and practice-oriented information to be expected on the 7th of September. If you are ready after this theoretical session to start your practical session, then please include it into your calendar, the 7th of September, 4 p.m. Moscow time, and other speakers will be looking to seeing you at this time to study some practical things with you. And now, if you have some questions, I know that we are the global community, so please raise your questions in the chats. Next slide, please. If there are still some questions open, you may not understand anything, or there are still some questions I didn't respond to, please ask your questions. If there are any further questions in our chats, I would be glad if the interpreters give them to me, and I will do my best to answer them if possible. We are waiting for the questions. So in the Italian chat, there are only thanks. It's all clear. There is an interesting question. If I know some project and they are asking me if it is fake. And in Europe, the activities related to cryptocurrencies should be approved by Eurobond. But in our register, I believe it's some promotion or advertising. It is not the question related to the topic of our today's session. There is an interesting question: why Maria Antonenko left the company and stopped running webinars? As far as I know, like any other employee in any other company, today one person is employed, then he or she is replaced. The reasons: she may be tired or her services are not needed. I believe it is not the question to be discussed here. If you like the way Maria Antonenko presents this, I believe you may contact her personally, because she is a very knowledgeable person in blockchain. I don't know, maybe our management likes my sessions and I was asked to run these webinars. Maria Antonenko is fine, by the way. She is busy with her stuff and she is an employee like myself. Today I'm hosting the webinar, whereas tomorrow there could be someone else. Are there any other questions? Questions about blockchain itself? You still don't understand mining, wallets, types of tokens. So another few minutes, maybe we will get some questions. No questions in the Arabic chat. Look, I found a question about the RAM of the wallet, 91%. This is from Tamil Room. Look, this question, by the way, will be answered at our next session. So it will be fully answered. Come to the next webinar. It is on Cryptounit blockchain. There you will study in detail the memories of our blockchain. There are different blockchains with different capacities, and to carry out different operations and transactions, there should be different requirements for smart contracts or other resources for blockchain to be fully operational and functional. So therefore, in this case, to get your question answered in a high quality way, please attend our next webinar. Are there other questions? Is there a recording of this webinar available in back office? So the recording is available. There was the first series of webinars on blockchain and cryptocurrencies. This recording is available online on the internet. And we are running the second series of trainings as many people got interested, and I believe there will be the third and the fourth series. Would you like to invite to such trainings your friends, those people you know, and would you like to share the same knowledge with your relatives, with your friends? Do you have people you know who still don't know about blockchain? Give me some feedback in the chat if you would be interested in attending such events monthly, where you may not only learn the information about the history and the technology as such, but to follow some trends in the development of this technology as well. Great. If you are interested and I see your feedback, I will be really glad if you take the first course, answer the questions, and will become a winner of our prizes and win some tokens. And then the next series of these trainings will be attended by those people you know, by your friends. Thank you very much for your feedback. Thank you very much for your time, for your attention. And I say goodbye to all of you, and may financial power, financial force stay with you. Bye-bye.